One, two. There you go. Hold on. I'm gonna call the order. The joint close at 7:05 p.m. And we're gonna have Charles Renge lead us in the pledge.
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Maybe the next election.
Maybe that's it. You gotta
I gotta get elected. It's a lock and roll.
All right, a few preliminary
There's
comments
no clue.
before I turn the meeting over to James. So first of all, tonight, we're gonna have some very good news. We're gonna have some good news. We're gonna have some almost good news, and we're gonna talk about a new project. So 4 things. So I think what we'll do is start with the very good news. And in that regard, I'd like to say a couple things that over the last several years, I think we sort of lost track of what we used to do annually to bring in our investment advisors to keep the finance board and the Burgesses up to speed on investments. And starting with Eileen, that's going to be corrected. We're bringing them in. Now, I don't know if you read the Hartford Business Journal or if you do regularly like I do, but they had a big article on financial advisors. And as it turned out, ours was recognized as the biggest and the best. And our advisor is the leader of the firm, who couldn't be here tonight, Mike Goss, who I'm sure you remember, Diane. He's been with us for years. But he sent an able substitute tonight, Chris. And Chris, I'm going to start off by turning it over to you. Well, let me make a couple comments because I want the finance board to think about some questions in relationship to some of the things we've done. So I'm sure, as you know, we did a bond restructure, wow, I don't know, five years ago, or in that range. And when we did it, we were very fortunate and we got to borrow funds at 2.78%, which is pretty much as low as you can get for an interest rate. We also had to make some investment assumptions in accordance with our pension documents so that we would be conservative, well, pretty much have a plan. So we assumed as a town that we would earn investment income of 5% a year, which is conservative. Now, we have done significantly better than that. And I'm going to have Chris tell you about what we've done the past few years, what we've done under the last volatile, we'll say Trump year, where things were a little crazier, where we are now, I guess where he thinks we're going. And I'd like everyone to ask questions, but remember, and maybe you could talk about this, that when you pay 2.75% and you earn 8.76%, that's a good thing. And that helps us with our pension plan and, the overall health of our finances. So, going forward, I think that we'll do this at least once a year, more if everyone wants to. But I'd like you to hear straight from him where we are, what we do, where we've been, where we're going, and take it from there. Chris.
Great. Well, thanks, Mr. Mayor, and good evening, everyone. Good to see folks. As mentioned, Chris Cashmore, I'm another partner at Fiducian. I work with Mike. Don't have the privilege of working with the borough regularly, but I do work with Torrington, north of here, and Ansonia, the other end of Route 8. So in the area pretty frequently and work with a number of your peers around the state. As the mayor mentioned, we do a lot of work around the state with municipal retirement plans. So as the mayor laid out, we'll walk you through at a high level what's going on in markets recently. I'm sure you might have questions or interest there. And you'll remember, we're the advisor to, bear with me here, but we're the advisor to 8 pools of assets that you folks have in your borough. There's the employee plan, what we call POB 1 and POB 2. We'll talk about that a little bit. Firemen, remember, POB 1, POB 2. We've got two cash accounts that we use to work with Eileen on funding pension payments for each of those pension plans. There's a Board of Ed plan, you might remember. There's an OPEB. There's data in here. We can get in as much detail or as little detail as you'd like, but we'll kind of walk you through all those data points and what's going on. As the mayor mentioned, performance has been very good, really across the board. And then we'll finish with, we thought it would be interesting and helpful to the group. We've actually got some statewide statistics that shows how the borough ranks versus a number of other large plans around the state, and is kind of hinted at, your numbers have been very, very strong, which is good. So
I would say the best.
right up there, yeah, you're right next to
Look at
West
the
Hartford.
chart.
You're right, because you were right up,
above West Hartford.
right at the top. Yep,
And by the way, that's the town we competed with for the 2.7.
yeah, they were right about there too. They issued
They
at the
were
same time.
AAA, they issued it at the same time.
Yep.
We weren't as good, but we did just as well.
You did.
Kind of crafty.
You did, kudos. So again, I know there's a lot here, so
Don't
I,
compare us to West Hartford again. We're gonna pass them.
that's fair enough. I don't have any issue with that.
And don't compare us to Farmington.
We will not. Let's skip ahead to page 4. I know that's a busy graphic, right? There's a lot of numbers on the top half of the page. If you can see in the very upper left-hand corner of the grid there, what we're just trying to show you here at a very high level is what markets have done year to date. And I would focus your attention, if you would, on those vertical columns. And we're not going to go through each and every one, but I'll give you a little bit of flavor for what's gone on in markets over the last several months. If you look from the third column in from the left, you see a US core bond. What does that mean? Right? That's where your managers that investing bonds in your programs generally focus their efforts. And those markets broadly have been up about 4% year to date. Right? You've read about interest rates bouncing around. You've read about the Federal Reserve resisting to lower their rate. And there's been a bit of volatility in interest rates as a result. But by and large, fixed income securities where your managers focus, up about 4% over the last 6 months through June. If you turn your attention, move over to those gray shaded bars, square in the middle of that exhibit, and you'll see the global equity markets, and we'll kind of highlight a couple of numbers for you here. The US large cap, you see up about 6.1% for the first 6 months. Everyone see that number? That's the S&P 500 that you read about, right? Those are big name stocks, the things that are in the press all the time, in the paper all the time. There's also small company stocks. And interestingly enough, look there just to the right of that 6.1. Actually, through June, small company stocks here in the US are actually down a little bit, down about 2%. You see that number 1.8. The big story here, and it's important when we look at your programs in just a minute, is look how well the international markets have performed versus the US markets. So that international developed and emerging markets are non-US equities. They're about 40% of equities globally. And you see they've had a very, very strong year. And that's really different. If we were sitting here a year ago, and you looked at these charts, you would probably invert them and the US markets would be handily outperforming the international markets. The point being, right, in your programs, we stay disciplined and allocated to all these different segments of the markets. It's really hard, right, to figure out with precision when markets are going to do well or lag a little bit. But if you've got a good allocation, like the mayor mentioned that you do, good managers working on your behalf, and you're kind of disciplined around those targets and strategy, over time, right, those different segments will come into favor, and that's exactly what we've seen with international. The economy is growing a little bit, as you've read, right? There are certainly challenges. Tariffs have created a little bit of indigestion for investors, right? You know, we get a different story on tariffs each and every day, it seems like, but the markets have been pretty resilient. You see here, they've performed pretty well. We think for the second half of the year, there is a pathway to continued good performance. Not without volatility, right? Because there's a lot of headline news and a lot of things to kind of grapple with. But nonetheless, the economy's decent. When we look at corporate financial health, right? Earnings for companies, their cash flow generating, prospects and whatnot, they're still all pretty strong. So, the base is set there for continued good returns. Does that mean we have a down quarter here and there? For sure, we always will, right? But by and large, we think the table's set to continue to kind of see the type of returns we've seen more recently. That enough for folks on kind of the big picture stuff? I think it is, but again, stop me as the mayor mentioned if you want to get into more detail. All right, let's get to the fun stuff. Page 5, we'll start with the employee POB plan, right? And think about this pool as the one, you had a pension obligation bond, remember back in 2003? And that helped kind of fund up this account back in that time frame. And you can see there the performance for the funds we track in the upper left-hand corner of the page. And you'll see there, I'm going to again not go through each and every number, but just give you a couple of highlights. For the fiscal year ending in June, up a little bit north of 11%, 11.2. Everyone will note there, right? Look at the number right next to it, the lighter shaded number 12.7, as we label it the benchmark. There's a couple of managers in the program that have generated positive returns, but are a bit more conservatively positioned. So relative to a benchmark, there's a little bit of a lag. Nothing that's of concern to us over the long haul. Invariably, we know each of the managers, even the good ones, will have, periods when their style might be out a little favor. So we're on top of that. We monitor it. It's not a concern of ours. It's something to be mindful of. More importantly, look, for example, at the 5 and the 10-year numbers, right on the right side of that benchmark, as you would expect they would be, with the benefit of time. And then moreover, the mayor mentioned, right, I think back in, you mentioned the 2.78 there. I think back in 2003, you issued just under 6%, if I remember right, 5.9%.
Not sure, but I think so.
So there's that relationship again, right? You borrowed at 5.9% for the pension obligation to fund it. And you've been earning well north of that, right? Since you did that, which again is the right side of the ledger, right? You're out earning with those monies you received versus the pension bond rate, which is exactly what you want to happen. So the program obviously has worked, just as intended and expected and hoped for. About as good as news as we could have. That makes sense for folks? That's the big pool. Remember, if you go to the next page, go to page 6, and again, I won't linger here, but just so you see it for the record.
Let me stop you for one second.
Sure.
So when Chris mentioned 2003, 30 years, 2033, you'll be hearing later in the year a new bonding strategy that takes all of those numbers into account. And we'll be talking about that in detail later in the year, but like that number 2033 has been in my head for a long time. We have some plans to, I'm going to say, move the benefit of that great year forward so that we can start taking advantage of it 5 or 6 years before we get there. So we're going to have a huge discussion over that, but I just want to prepare you for it. But that's a great spot for us. We get a lot of debt service, like 4 million goes away in 1 year.
Chris, we have another question here.
Just for point of clarification, because I'm not good with all of these charts. On the right-hand side, you have the beginning market value, the net contributions, gain, loss, ending. Is the net contribution meaning what we take in and then what we pay out, and that's why it's a negative number?
Yeah, so the net contribution would basically be the bottom line, right, result in terms of the obligation of the plan through time. So that's exactly what that is. Right. And then the gain loss is strictly related to the investments and what they've done. That's a great point though to finish on. Look at the upper right hand corner of page 5 to that premise. And the numbers are big, right? So just to give you a flavor for the fiscal year that just ended, so you started at 119.4 million. Everyone see that number?
Mm-hmm.
As you just highlighted, right, on a net basis in terms of the obligations of the plan, about 8.6 goes out to service pensioners, and you had a $12.8 million investment gain. right? Then you get a good year in the markets and those numbers mushroom pretty dramatically. And then as you see there, you reconciled at the end of the fiscal year just to about $123.7 million for that big pool. But they're pretty meaningful numbers, right?
It's almost
question.
real money,
Yeah.
I'm sorry?
almost real money.
Yeah, exactly. So, and again, keep stopping me here with these questions because they're great and we want to make sure you answer we get everything answered. But look at page 6. Just so you see it, so we just talked about that asset total. And again, we wanted to give you a flavor at a high level just for under the hood, right? The different managers, the different styles we have in the program. You see there, the fixed income category. I'm in that left-hand banner just so you can see all of them. And a combination of managers that we, have a lot of collateral on from a due diligence standpoint and follow very closely and have done good work over the years, of course. Domestic and international equity, real assets, right, for some diversification. The takeaway for this group, hopefully, that you see is at your size, you have the wherewithal, right? We can access a lot of really high quality managers and do it in a manner here that's segregated by asset style, right? Some focus on particular segments of the markets and styles of investing, but a lot of diversification at that asset class level, which is important. It helps smooth your returns out through some of that volatility. And then moreover, right, a lot of diversification, what we call entity diversification, right? You don't have all your money with a single manager. We don't need to do that. We piece it together in a fashion that makes sense in aggregate, but under the hood, we've got, individual managers kind of all doing their specialty work. And then moreover, you can appreciate, it doesn't happen all that often, but it happens. If we've got to take a manager out, you don't disrupt the whole program, right? You can just slice out the manager who, for whatever reason, doesn't make sense for you anymore, and you can slot a replacement in. So there's a measure of flexibility there too with this structure. That makes sense to folks?
Yeah, make that call, Mike.
Mike, well, we've got a discretionary committee, Mr. Mayor, internally. I actually chair it. But Mike is your consultant, certainly has input into that. And then our committee over time does the work monitoring this program. And then we would collectively kind of make the recommendation. And then he would come back to you with the idea.
Right.
How do we know that this is operating within our controls of like what we set as policy for you?
Yeah, so
'Cause I
we.
don't see that.
Yeah, so we do have, the analysts back at the office are looking at your balances on real time on a regular basis. And they're looking at these totals, right, actual versus the target weights to make sure we're staying in range. And we're not violating any of the, standards that are in your investment policy statement, which we obviously have coded into our systems, right? So we can check and see that regularly.
Is there
And
a
I think
reason,
it's kind of
is there a
like-
reason there's not a column that lists what the policy limits you to, like,
Yeah, well,
like
we.
being 20% international? I'm assuming that's within policy. I've not seen the
Yeah,
policy
yeah.
in my capacity on this,
Yeah.
dual board here, so.
I haven't seen it as no, is it?
Yeah,
Yeah.
so we can certainly get you a copy of it and,
I just wanna make sure we're operating.
Yeah,
I
you
mean,
are.
it's great now, because it's
Yeah.
all positive.
Yeah.
But if it goes the other way, which it will at some point, I
Well, let me ask
wanna
you a
make sure
question.
that we're.
Sure.
Hasn't it remained positive for the last 10, 12 years?
when you roll it all together, there it is, but remember, there are challenging, go back to 2022, and we kind of forget it already now, it's not too far in the distant past. The fixed interest rates went way up, remember the Fed started to raise rates because inflation was so high. Bond prices went down, and oh, by the way, equity markets went down, the S&P was down
Well,
about,
we did have a discussion now.
yeah. And,
I
and,
wasn't the mayor, but I recall that period.
yeah, so you do have challenges,
He's
but.
talking about 22, you're talking about 2008.
Well, but I'm thinking about the only time we had an issue that was ever brought to my attention. I was the attorney. So I guess my
think in
question,
22, we didn't go.
no, I'm
through
asking the
this.
same question to
See it.
you. Was there a time in the past 10 years when we had an issue that I didn't know about that was brought to the town's attention?
Not versus the policy statement, no, because the ranges are, the ranges are wide enough to accommodate just capital markets moving around a little bit, right? You don't want to be too precise with it. You want to have some flexibility in the program. But again, we do regularly monitor those balances versus those ranges that are acceptable in the IPS. And those target allocations you see here, I didn't mention it, but go back to page 6, right? When we're rebalancing, you know what we're gonna do, right? What is the natural and kind of the right discipline tendency? The asset classes that are underweight, when it becomes of a magnitude that requires action, you get more monies, right? And the asset classes that are overweight are the source of that money, right? Because you're always kind of have a discipline rebalancing back to those targets that you see in the column second in from the right. So there are a bunch of different kind of touch points and mechanics around staying true to the IPS and to those target weights that you've got in the program. But that's a great question, and we
I
can
have
certainly
a
get
follow-up for you too. In terms of columns of what I think we should be seeing at this level is, like whatever the basis points are for the fees that your firm or the people managing it are taking as well. So those are also within, our transparency here.
We actually have, and we can send it, Eileen, the full report, the quarterly report that we prepare has all of the fee details in it and exhibits on all that. We, for the kind of the sake of tonight and just getting you caught up quickly, we eliminated some of it, but I'll send the report to Eileen and she can share it.
Perfect.
Committee.
Let me say two things along the lines of what Jim said. Going forward, we want the mayor, the finance board, through Eileen, to get more information and review it more regularly. I think that although we've done well, and that's great, we should review it more regularly. And number two, if there's ever a real problem, I want you to alert not just the controller, but the mayor and the chairman of the finance board.
I have a question for, this is more on the town side, but who actually has the fiduciary responsibility to manage this?
Controller.
Okay,
That's you, and
Yes.
yeah, okay, I thought
So it
so.
is now, but the,
Yeah, I know, I got.
that's
that's like,
a
Eileen's the
critical.
one that needs to be most informed, she's got the
Yeah,
fiduciary
yeah.
responsibility.
Understood,
Yeah.
but I'm just saying it's a more critical role than people realize.
Right, oh,
Right.
absolutely, absolutely.
Oh, okay.
No pressure, you're good.
Yeah.
So it sounds like what you're saying, what's happening right now is suitable for the long-term goals.
Mhm.
And those goals are reviewed yearly.
Yep, we
In order to
retest
make
these
changes.
allocations once a year and then, we would kind of make changes. Just to the point of fiduciary responsibility, remember, we contractually share that with you. As a discretionary advisor, we have some of that fiduciary onus as well alongside you, so we're obviously on the same side of the table with the same objectives and incentives to be, true to the policy statement and kind of consistent with the needs of the program.
And because this is a pension plan, it's a little different than what I'm used to being involved with. Do all the same ERISA laws apply?
Well, municipal plans are not technically subject to ERISA, right? That's just corporate plans, as I think as you're alluding to. Although I would tell you that a lot of towns around the state kind of adopt the spirit of ERISA, right? They want to be mindful of objectives, they want to be mindful of costs, they want to be mindful of process, right? And kind of following a consistent type of an approach. And so while you're technically not ERISA subject, a lot of people operate that way, and our program is kind of designed to satisfy a lot of those obligations too. Again, recognizing that you're technically not under ERISA. That's kind of a corporate threshold, but a lot of those they're good edicts that come out of that corporate process that are, equally applicable to municipalities, and people kind of follow the spirit of ERISA. It's the way you hear people say it, and that's the way we approach it too.
Thank you.
Great questions. So we'll forge ahead here. So that's big employee POB, and then we've got POB 2, which is on page 7. So this is to the mayor's point, right? This is the kind of the more recent pull from 2021. the 2.8% number, right? Again, we talked a little bit about the relative number, but you see the fiscal year, another strong entry, right? 11.2%. I'm in the upper left-hand corner of the page on the dashboard there. Just because of what capital markets have done since you issued, right? The absolute number inception to date's a bit lower. It's still north of 2.8, right? You're at 4.6 or 4.8, excuse me. Here, am I seeing that correctly? 4.6. I'm sorry. My glasses are not functioning. 4.6. With this portfolio is modeled to do more than that, right? This is just a byproduct of kind of what markets have done over the last couple of years. Again, remember the drag of 2022, with the benefit of time and the totality of market returns, right? And we do expect this plan is going to start to have higher returns and is modeled to do, north of the 5% bogey that the mayor mentioned for sure. So again, that's just a byproduct of kind of where we stand with it. But you see here, the same type of results when you look kind of year to year. Some of the math is in the upper right-hand corner of the page for you. You see it there, just to the earlier questions around it. So this pool, POB2 employees started at 44.2 million. You see that upper right-hand corner of the page. Not a big drag here on cash outflows, which I think we use POB1 for, right? So that's fairly nominal. And then a $3.3 million gain. So this plan is at 47.6 million. Hopefully, for the assurance of the joint committees, if you go to page 8, you'll see a lot of familiar names, right? That's intended and by design, right? Very similar structure to what we just talked about with the big plan. Diversification, a little bit of active and index approach, but that same general mentality here, and that's by design and intention, and all the things we just talked about from an oversight standpoint, right? And monitoring balances and monitoring compliance with the IPS and all that kind of stuff is obviously going on behind the scenes on your behalf. So that's POB2. And folks okay with those two pools?
I got another question for you, Chris.
Sure.
Of any of the, funds that you can contribute to, switch in and out of, et cetera. Do we have, and if you don't know, and gotta get back to assessment, do we have a policy that indicates certain funds we must avoid if you are familiar with like a one that's specific in abortion promotion and it's not something the town wants to be involved in? I'm not taking a stance, I'm just giving you an example.
Yep, if we can code that in the IPS, I don't think it's there today, right? I think and that's pretty typical for municipalities. Very few get involved with socially responsible investing. I think there's other people's money, we're just not gonna do that.
Right.
We're just gonna let the, investment fall out where they may. But we have that capability to do it if we were to, at some point in the future, you wanted to talk about it and investigate it. The other thing I failed to mention, and I think you kind of alluded to it, and it's an important point. These funds can be turned, this portfolio could be turned to cash in one day. Right? These are all institutional mutual funds. There's no impediment to trade or transact in these. We don't have to, go through a liquidation like you might have to with this, what we call a separate account manager or whatnot. So it's really flexible from an operational standpoint, right? To move monies around and redistribute things, raise monies if and when we need it, and that's all in consideration there. So your program not only is diversified, it's extraordinarily liquid too, and that's by design.
Thank you.
So I think the next two plans should go more quickly, but just so you highlight them. So on page 9, you've got the fireman POB, right? So we talked about employee POB, fireman POB. Same basic tenets here. Look at the numbers in the dashboard, right? We won't go through all of them, but they rhyme basically and are right on top of what you see with the employee plan. There can be 1/10 of a percentage point difference in some of the numbers just based on flows and that kind of thing. But again, by and large, they're right on top of each other. To the mayor's point, right? You issued low south of 6%. You see the long-term numbers there, right? All pretty consistently above that bogey, and you're in good working order here. You see the arithmetic for the plan in the upper right-hand corner of the page. Again, I'll just use the 1-year column, kind of where you started, where you finished. About a $4 million investment gain. We're just at about $39 million at the end of June with POB, fireman POB. And 10 sounding like a broken record, right? Looks just like what we've been talking about, right? Same lineup of managers, same type of allocations, by and large, the same objective of the employee plan, and as you would expect, no differences there. And then jumping right on to 11, POB two, just like employee POB two, right? In terms of composition, and you see the return streams there, which are right on top of what we just talked about. A little bit of a smaller pool. You see there about a $14.2 million pool, but nonetheless earning nice returns, and again, earning north of that issuance rate that you were fortunate enough to get back in 2021. And just like the employee plan, right, over time, this is modeled to do north of 5%. I think we model it at 6.25, something like that, when we did the work in the last go round. So you've got a margin of safety there too.
Now, the reason we have two is that when the pension stopped and we switched over to.
Yeah, and I think, right, so you had the original POB issuance in 2003. I think that predated us maybe when we came on in 2007. And then I think it's right, you did a second cut at it when rates were attractive and said, hey, we can come in and we think we've got a proposition to do better than that issuance rate. So POB two, that second 2021 issuance. And I think it does, I can't speak to all that, you guys folks probably could better just in terms of some of the other dynamics, but I think it does relate to some of those changes.
There were a lot of dynamics.
Yeah, well, there always is, right? You folks have a big responsibility. And then on 12, I'm not even gonna spend 10 seconds on it, but you see POB two, again, just like employee POB two, same collection mix of managers and kind of everything in good working order. 13 and 14 are just the cash accounts, right? So we have set asides that kind of near-term obligations of the plan. Those monies for both employee and fire are just warehoused in money market funds, right? So you see there was at the end of June about $790,000 in the employee pension. This did have some assets in it other than money market. If you go back and look at some of the longer dated numbers there in the upper left-hand corner of page 13. So, the near term results there look money market like, as you would expect. They're a bit lower in absolute terms. The longer dated numbers is a little bit of mixing and matching, right? Because there used to be some assets in that program before you changed the structure. But again, nothing to worry about or attend to. And then on 14, there's about full quote 460, $466,000 of money market for fireman pension, just to support some of those near-term obligations. Pretty straightforward, right? And not a whole lot goes there, but we do have you in nice yielding money market funds in both cases. So those work nicely alongside your investment pools as transport vehicles to get money where it's needed to go. Folks okay with that? Make sense to everyone? We did include here, I'll defer to the group on how much time you want to spend on it. We did include the Board of Ed plan. Remember, this structure is a little bit different. The program is just $7.7 million. Pretty nice returns there, as you see, right? Not pretty good stuff happening in the upper left-hand corner of the page. As Mike maybe has talked to some of you about, given the nature of the plan and kind of its startup phase, it is all indexed today. So remember, the bigger pools, we've got a little bit of indexing and some active, more mature, more assets. If you go to page 16, you see what I'm talking about. Diversified program, right? Equities, fixed income, domestic, international, little bit of REITs to diversify the program, but all Vanguard indexed, right? So very low cost. So the intention here, right, is get the allocation right, not pay a lot of fees, let the markets do what they do. And right, when you go back and look at the dashboard on the previous page, markets, as we've talked about, right, other than a couple of circumstances, have done pretty darn well. And this program's done pretty darn well, right? You see there the returns over time are pretty strong and match the benchmark as you would expect because you're all indexed. That makes sense to folks? The final one is the OPEB plan. I'm on page 17. And similarly here, right, this is an all index structure too. Again, the returns you see there are pretty darn solid and strong through time and consistent. And on 18, you'll see similar to what we just talked about with the Board of Ed plan, right? It's diversified, but using those low-cost Vanguard funds to express the strategy for the time being. Get you in the markets, get you allocated, and over time, we know markets, right? They go up more than they don't. And if you're patient and kind of wait it out, you get some pretty good returns, with the right allocation.
I'm sorry, I forgot. What's the OPEB?
That's okay, I was just clarify it. So that's the other, what's other post-retirement benefits, post-employment benefits for retirees. And so just so you know, the BOE plan that's the BOE OPEB plan.
Okay.
So that for a long, long time around the state, right, municipalities kind of did pay as you go, right, for those obligations. You would contract it with employees who were covered to have some measure of health coverage beyond retirement, right? Eileen can talk to this better than I, but the accounting standards changed, the way you kind of account for them changed, and what ended up happening is municipalities started forming these trusts. There's some beneficial accounting treatment you get to do that and to fund up for these obligations. And you're in good shape. You've got a nice sized plan here. I can tell you that a lot of municipalities around the state haven't even formed trusts. They continue to do pay as you go. They just don't have the money to do it. So
This is like the retiree medical?
Yeah.
Yeah,
Okay.
exactly.
exactly. We don't have really any dental,
Yeah.
medical and dental. There's no other retirement benefits.
But it's for the town and for the Board of Ed, that is what the those two plans are.
Yes.
Okay.
And, we're pretty much paying as we go right now, but we're putting this monies away. So this is for the future. So we're not using this to fund any of the benefits currently. This is for the future.
I'm gonna ask you a question. I don't expect you to know the answer. But we have a running discussion with our actuaries about the fact that the profits we're making being over and above our assumptions. At some point in time, in my mind, should make it easier for us to pay less. I don't mean immediately, but in some conservative way. If we have more money than we expect, it's gotta help you somewhere. So, we've talked about it with our actuary.
And they've resisted a little bit.
They resisted completely.
Yeah, I'm just gonna say.
Yeah.
And I disagree with them.
Mhm.
And I'm just gonna leave it at that,
Yeah.
and if you wanna comment.
I can.
Okay,
No, we can for sure. So we, and not casting blame on anyone. I think you use USI Hooker. Is that right? Yeah, okay. So we know the team there pretty well. For years and years and years and years, right? Everyone had pretty high rate of return assumptions, 8, 9%. You go back 15 years, 20 years, people assumed 8 or 9%. For a period of time that was achievable. And then interest rates began to come down in a pretty consistent, right, manner and stayed low for a long period of time. And there were pressures on equity returns, and all the actuaries said, you can't have 8, you need to have 7 3/4. And next year, we're gonna make you go to 7.5. And the year after that, you better look at 7, and there was this march. It's not just you folks, it was everywhere. It's march lower with return assumptions. I think we reached the plateau, right? I think we've
let
gone.
me just take it a little further. We went to 5.
Yep.
And in addition to that, we've been earning way over what we assumed. So the fact that we have a conservative assumption and we're doing way better than we assumed, I would hope will help us at some point.
I think you should be having that conversation, and we are seeing you're not the only ones doing that. I think other people in kind of similar conservative postures are saying we're consistently out earning our discount rate. And I know you made us bring it down for years and years and years. Why now, if things have plateaued and we've got evidence that it's going in the other direction, can't we follow that return assumption up a little bit? You can absolutely have that conversation. I think the actuaries and Hooker might not be in this camp just yet. Others are. They're starting to kind of, I think, show a little bit of flexibility there.
Who are the others?
Well, the other big one in the state is Milliman,
Right.
is the other, the Milliman and
They're the
Hooker.
only other one in
Yeah.
the state, right?
Yeah, they're the two, there's a couple other smaller ones. They're the two primary ones that work across most of the
Any
state.
smaller ones you recommend we talk to?
I could get you, Mr. Mayor, some names. There's a couple out there. There's an outfit out of the greater Mid-Atlantic region. I think they're out of Virginia. I can get you some details from them. They started to chip away in Connecticut a little bit. They're nowhere near as big as Milliman is or Hooker is for that matter. But again, we would work with you to kind of do the math on the asset side. Here's what we expect the return profile to look like. We do it every year, as we mentioned earlier, right? At least every year or more frequently if conditions warrant. And present that evidence to the actuary. Say, listen, we think that the town as it's allocated today can generate a 6.5% return. You're discounting the liabilities at 5. And
Right.
we should have a conversation around kind of making those things rhyme a little
I'm
bit.
gonna say it like this, and I think I speak for everyone. We wanna be conservative. We're not looking to do anything crazy. We wanna be conservative, but we don't wanna be the Catholic Church and be 3,000 years behind the civilization as it stands today.
It's a fair conversation to have.
This has been our fight.
I know,
How long?
I
Like, since I've
understand,
been on the board, essentially.
but this is the only battle I've never come close to winning. I may change the players in the game and we'll win, but I still wanna be conservative.
Yeah, no, I get it. I
Right.
completely
Right, is
understand.
that how everyone feels?
Absolutely, absolutely.
Yes.
And would you guys be at the table when he's negotiating to?
We certainly could be. I mean, we're in other settings, we sit in on those conversations and,
Yeah, it
and,
doesn't make sense to me if you don't, to
yeah,
be
We've
honest.
never had a negotiation. We've had a firm no.
yeah.
Well, maybe we start having the conversation, and if they say no, then we say, okay, we're gonna look elsewhere.
Yeah.
No, I
I mean,
agree.
I like the farm, I'm
I'm not saying I don't like the firm. I think they're very competent. They're just, they're
Especially-
ultra conservative.
But especially with the firemen. And how many are left on
That's
that?
what I mean.
There's like, what, 5 left?
Maybe less.
I think there's less. I think there's
Yeah,
3 or 4.
that's what I mean, like, there's nobody left on that old.
So think about it.
Yeah, I'll talk to Mike about it and you can absolutely, we participate and try to help you there.
All right, thank you.
Mhm.
The last thing I'll leave you with is the mayor previewed, right, the best news we had a lot of good news, hopefully, and you took it that way because your programs are performing well, but on page 19. I know this is a busy chart, so let me offer you up a couple of, and this is a smart group, so I know you understand it, but on the left-hand column, right, the vertical column are returns. The horizontal column down below is what we call the volatility returns or the standard deviation. Milliman went out and did a statewide analysis here. Now, this data is a little dated because it comes off the CAFRs, right? So bear with us, but it's the 10-year period ending in 23. See that at the top of the page? You see, these are all larger plans around the state is generally the kind of the toggle point there. So these tend to be some of the bigger plans. You all know where you want to be on this chart, right? You want to be north, right? The higher up, the higher return you've got. And the mayor mentioned that you do have, in an absolute sense, the very highest 10-year return in this peer group. So, very good and strong returns compared to many of your peers. Now, you could argue, right, you're a little bit more volatile, maybe, but you've been paid for that volatility, right? You can kind of stomach that because, you're making your contributions, you're disciplined with the allocations, you're not kind of running in and out of things. So there's a measure of volatility, but you've been rewarded for it, right? Because you do have very high returns. So the takeaway here is you really are, the mayor will correct me again, and I know that, but you're among the very best performing plans in the entire state. And this is,
Satisfied.
so it's obviously a great story. I don't want to pick on anyone, but you see Waterbury there, which is, Bridgeport is one that's, struggling a little bit. You certainly want to be on the top half of that line, and moreover, the higher north you are, the further north you are, the higher.
What happens to Glastonbury? I thought they were, dark as patch.
Glastonbury's interesting, right? It's actually an account I work on, their relationship of mine. I've been a bit more conservatively postured, for a host of reasons, and You know, the returns have been adequate, but you see they're somewhat less volatile maybe than some of the peers. So I think it's just kind of a confluence of things, but they're in pretty good shape. The other towns that we work with here, just so you've got it, West Hartford, I mentioned, is a client. Westport is a client of ours. Stamford Custodians is a client. Stamford Surf was a client for this period. Meriden a client of ours as well. So, that gives you no color. So it's a nice, right? It's a nice comparative picture for you, right? You do have a good litmus test here for good results.
Actually, why are some cities broken up into different, like?
Yeah, the bargaining groups have separate, kind of separate pools. I think what we used in our calculation, I think we kind of used an amalgamation of your two big, longer standing POB plans. For this purposes of this calculation, but some of them have slightly different allocations. The bargaining units might have different advisors, that kind of thing. So you see it broken out, in a bit more, detail. Bridgeport, you can see is like that, Stanford's like that, Meriden's like that, Norwalk.
And these other municipalities or groups that are in here on this chart in 19 are comparable to us in what way? Like in dollars of assets that we have under management with you?
Well, I think the exercise that Mike went through was just to kind of similar in size, maybe a little bit bigger on average. Although when you pull all your assets together, I think you're of a very comparable size to many of these. On balance, they're probably slightly larger, but I think they share the fact that they tend to be mature systems like your systems are, right? I think their allocation profiles are pretty similar to what you've got in terms of the mix of assets and managers and that kind of thing. So there is a similarity there, but size was the barometer here on the original study.
I would say this for our Facebook followers. Naugatuck is a small city. We are not a small town. And you can see we're comparable to other small cities and even bigger cities. But I mean, we're a city.
Well, that's your fault, Pete.
Well, we were a city before I started.
Yeah, I know that.
What's our expense ratio? Well, off the top of your head is fine.
So I'm gonna, here's the quarterly report that I mentioned earlier that we do on your behalf, which I don't know anyone wanted to look at tonight.
So it'll be in there.
It's in here. Give me 30 seconds. It should be, if I think I know where it is, it should be right up in the front here. Did they not put the I think the investment management fees are about 35 basis points, right? So that's about 1/3 of 1%. I think is about where you are for investment
Hey, if it's
expense.
under 1%, I do a dance.
Yeah, oh yeah, by design, yeah. You have institutionally priced funds, so,
I think you now have the floor for 30
Not the
minutes.
music.
I misquoted you, 37 basis points is the running channel.
Wonderful.
So I don't wanna overstay my welcome here.
Well, let's just, does anyone have any questions? Further questions?
Yeah, so in addition to what you're running here, is there a third-party administrator that's evaluating you guys that we should be aware of?
Well, we are a registered investment advisor, so we're under the protocol of the SEC. And I would tell you, the SEC came in and did a review of us like they do with everyone periodically. We got a clean bill of health from the SEC, and they just came through and did that this winter. So it's pretty recent. So if they're kind of our regulator, they come in and look at our processes, our controls, our systems, data security, all the things that you would expect an advisor to kind of be on top of, and gave us, a pretty strong rating. So that's kind of our checkpoint for you, that from a procedural standpoint, we're in good shape. And no concern there, expressed by the SEC. So they'll come out every 4 or 5 years and do an exam of us, and they just did complete one actually in the last couple of months.
Thank you.
So, So good story, I hope, for folks, and I'll talk to Mike about the frequency of visits and getting you folks information and being out here more frequently. I'm sure he'd love to do that. He tells me I have to go to Nardelli's all the time when I.
Lots of good.
Yeah.
So thank you.
Well, thanks, folks. Great
Thank you.
questions. Appreciate your time.
To the hooker and Holcomb answer than one.
Yeah, and listen, that's a conversation you can and should have. And we know we'll help you with it.
Thanks, Chris.
All right, thanks, folks.
We'll be.
Thank you.
All right, have a good night.
Take care.
I think Tim's got a question.
It's okay. You should, no, it's more internal.
Oh, okay.
It's fine.
Got it. Thanks.
So. This is good. This is positive. What the hell do we know? So they come in, they give you a big fat report. Right?
Yes.
But what I gave it to Alice,
Okay, so now they're gonna give it,
now they're gonna.
To your office.
Right.
yeah, that's right. So. And if this is rude, I really apologize, but do you know how to decipher all this stuff? Or do you have to bring in somebody to make sure that?
We'll go over it. I mean, we
Right.
have to do entries each month to record it, so I'll see if it's down.
Okay,
And so it'd be kind of, they do only come up with quarterly reports, but we have access to everything at the, pretty much a touch of a fingertip, so.
and you know what to do with all that stuff.
Yeah, I mean, there's only so much to do. I mean, Mike Goss is very receptive to reaching out to us if there's an issue, if there's anything like that. I mean, the markets have gone down, but they
Yeah.
come up. I mean, you
Yeah.
just, you can't react.
Yeah.
You
You know.
react.
That part I know, it's just, so, we have all this information that is in a nice glossy little report, which always makes me skeptical, that's just me. But we have it. I just wanna make sure that we have the capacity to review it against those rules against.
We felt it was necessary, we
Uh-huh.
could bring in, Eileen could bring in an expert to evaluate.
No, I know that, but that tends to happen in an emergency, so we have the checkpoints along the way that you're comfortable that.
Well,
Things are happening within our rules, things are happening, there are. When he says, well, if you get in trouble, of course, we're gonna contact the mayor, what does trouble mean?
Or
Do
not,
we agree with it? I know that, but
that's
there's,
why I asked the question.
I know,
Yeah.
but I want, when somebody says trouble, I want to
Let me
know
give
what
you
that
an
meant for
example.
us.
At the beginning of the presidency, I was concerned just reading, I read the Wall Street Journal every day. And
Right,
I don't invest in stocks, I just like that publication. And to me, the news you get from that is great.
Mhm.
And the news stories I was reading were scary.
Mhm.
So I had quite a few conversations with them. And every time I learned that notwithstanding what I was reading,
Mhm.
I think we were like 7%.
right,
And everything was fine, and we kept checking. So I think
okay,
in part, it's the controller's job, in part, it's my job. If it ever got to be a difficult situation,
Mhm.
we would bring in an expert
Mhm.
to guide us, or to double check, or to do
Mhm.
something. They're supposed to be our expert, but you're asking how we check them, so to speak,
Yeah.
if we have a question.
right,
So we'd have to get another expert to check them.
right,
But that's why I asked if there was a third
Yeah.
party.
Right,
right, and the SEC
Auditor.
isn't a great answer,
No.
that just means you're not going to jail.
Yeah. And what they're,
See how much I know.
also the hundreds of millions of dollars that we have among all these other towns, what they're actually checking is.
Yeah.
I want,
Right.
I want you to read that article in the Hartford Business. Yeah, that.
No, but I'm sure you could send it to me.
You have, we had it and we subscribed to
It
it.
might be downstairs.
Somebody must have gotten it.
There's also the other set of eyes, the auditor, I mean, after the auditor looks at it, and to some degree, the actuaries look at it. So they kind of report on each other. So there's indirect checks and balances as well.
Okay, all right.
There's a lot of eyes on it.
Yeah, see, in this report, you don't hear a structure. And
Right.
that's what you're telling me,
Yeah.
that's why.
I mean, it's informal and it's like the auditor is gonna find out after the fact, the
Yeah.
actuary, as well as the actuaries, but it's kind of feedback, like they gave us feedback.
Right, I got you, And
Um,
why does an actuary get to say no to you without an explanation?
Well, they have an explanation, it just
Oh,
doesn't make
okay.
any sense.
Uh,
Their explanation is sort of like, this is how it's done everywhere, is sort of the explanation you get.
That's ridiculous.
The probability before.
Well, and the thing is, like, the towns haven't changed their pension plans like we have.
Right.
And yet they still hold us to
They're
the
saying,
other
well,
town.
that was
Yeah.
Yeah.
the question, yeah,
Okay.
Even when I was chair of the board eons ago, right, Mayor? Like,
yeah,
forever, this has been a fight. that
at
we
least
have-
5 years, I think it's more.
Oh, it's more,
It's more.
it's
Mhm.
more.
You know, they seem to understand we're in it for the long term, and with dollar cost averaging, the gains are gonna be much better than the drawbacks. And it shows in the numbers.
Eileen, when you get your entries that you make off of them, is that a monthly entry that you're making? Yeah.
Yeah.
So that's another good indication to see if things are really starting to, you know,
No, you make me feel more.
Rocky, how many years ago was it we had to, town had to bond to save our pension fund?
Oh, gosh, it was a long time,
Cause that was,
long time ago.
That was in
That
the
was-
early 2000s.
that could have been devastating,
Yeah.
you know, had they not done that.
Yeah.
You look at at the time, it was controversial.
Yeah.
But when you look at when it was done, it was the right thing to do, and that was when things weren't so great.
Yeah.
And we have to understand, that's gonna happen. They're going to have ups and down times, and I think we're on an upswing, we refinanced the pension is for all intents and purposes. A few years ago, we had a windfall to help us put the skate park in, the seed money for the splash pad. And it helped us considering that budget year, we needed it, with capital work and so forth, so. It's a tricky thing, like, I look at my own finances, I'm like, "Whoa, I want to react, but then my better angels say, hey, leave it alone.
Put the brakes on.
Step back.
Hmm.
I mean, like, I was not terribly, if you notice, fixed income stunk on every single plan.
Mhm.
But then again, look at the world right now.
Right.
That's where we're at. We don't live in a vacuum. Internationals are up because the rest of the world's kind of catching up to where we were a couple of years ago, because we came out of COVID a little hotter than the rest of the world did. So I'm glad to see what we have. I'm glad we're going the upswing. And actuaries, I mean, I have friends that are actuaries, and yeah, they're dry white toast.
Yeah.
They're not gonna go differentiate from what they believe is right. It's almost religious in a way, the way they look at the
Try
universe.
living
So,
like one.
yeah.
Oh.
Good luck.
Fixed income is good when you're 80, when you can't afford to lose everybody, but
yeah.
But 2008 was the year that everything crashed,
Oh.
and I watched
Yeah.
my ISP
Oh, yeah.
like daily, like boom. You know, my stock went from 100 to $3.
Watch many coworkers remove their retirement letters.
Yeah.
I was like, oh, I can't go now.
So, just to kind of round this out, I will add, I do serve on an investment committee for a private company and then our credit union retirement plan. The returns I'm seeing on both of those plans to this average about 7% across
Mhm.
multiple long-term years, and I've seen the 11 to 13% range over the last year and a half. 2022, if any of you have a retirement plan, you'll likely have seen losses and it's recovered. I'm not an expert by any means, I don't have any special licenses for that stuff, but what I'm just saying is this seems to be like the other plans that I've seen, and it's not this company. In
Okay,
fact, it's all three of them have separate companies that I work with,
that's a
so
good. piece
I'm kind of
work.
liking the consistency.
Right,
Everybody's
right,
running low right now.
Yeah.
right, gotcha.
So that article, they are by far the largest, they have, I think these are just ones comparable to us, but they're very large in the municipal area.
Yeah.
And I've always had the impression that Mike Goss is competent and his structure is competent too, so I think they're strong.
Mhm.
All right, should we move on to preliminary?
Over to you.
You were, actually gave Chris the meeting, and that was after
I did.
me,
I
so.
should speak during my voice.
All right, Mayor, may I have the meeting now?
No, I got it, almost. So, as you recall, when I started, I only started my introductory
Oh,
comment.
jeez.
I said we had great.
All Mayor's introduction.
Very good news
Right.
of it. So, I just want to bring you up to date a little bit. On what I will call very good news. Restructuring the finance department with Eileen. And I'll give you a hint that the potentially bad news is that it's gonna result in more meetings of the finance board because
Finally,
we used to, Allison would like sort of put everything into a year-end summary and we vote on 48 things on one night. So with Eileen, we're gonna bring it back to the way it was. And we're gonna have more meetings of the finance board.
good.
And, that's the bad news.
Well, it's not bad news.
I know, but I'm just saying that, I'm just sort of joking. The good news is that we've made a lot of progress in, I'm just gonna say, reconciling our capital accounts. Now, in our capital reserve account, and I wish Bob Nett was on the phone to hear this, but I'll tell him separately. Over the last, I don't know how long, but when I was mayor, 10 years ago, we were almost finished using our 5-year capital plan. And everyone keeps hearing that term, 5-year capital plan. Well, you know what? That was out of money, I don't know, 10 years ago. Some of it's been replenished, but what's happened is that over time, the 5-year capital plan and the capital reserve account and another capital reserve account have been sort of blended together. And on the good side, we have more money than we need, but it's not designated versus undesignated. So we had so many projects over the last 10 years that went through that account that it became very difficult for Allison and her team to reconcile it for my satisfaction. So we're doing that now, and we've made a lot of progress. And don't forget, we made our job more difficult this year because we're taking 4 million out of our capital reserves to pay for our 2025 capital items in the budget. And we did that to help the Board of Ed.
Right.
So we could take care of our special education problem and other education issues. And you know, that's a pretty bold move for a town. And we're gonna be fine, but we're still working on replenishing our capital reserves, designating certain things that need to be designated, taking some old projects that were done a long time ago where we find some extra money and putting it into the undesignated section, which as a team we can use. So when we get to the agenda item, preliminary facility improvements during the portion of the meeting when James is running it, I will,
You're finally getting the meeting.
I will go through some proposed, motions for that. But we are restructuring the office. Part of the restructure includes me getting more frequent reports about things that I need, including their capital reserves. And also a more regular determination of what I would call transfers. We're not gonna do all the transfers at one meeting. We'll do them as we go through the year. And we'll have a closer look at, I'll just say, operating issues as they come up. So we won't learn at the end of the year, police overtime was way out of whack or whatever. We'll know as we go. So there will be more meetings. But we're gonna go back. I don't wanna say exactly the way it used to be, but a lot closer to that model. So,
We'll make that model for my time.
well, the model was,
For Eric's time.
the model was the transfers would be done,
Timely,
maybe not as they happen, but much more timely.
timely.
Let's say 6 meetings a year instead of 1, something like that.
Usually, a lot of times what we would do in the winter time. So let's say the budget meeting started at 6:30, and it, normally on Tuesdays, we have our finance board meeting. Well, what we would do is we would have a 6 o'clock finance board meeting on Monday, and then go into the budget meeting at 6:30. Usually, I'm gonna use that term loosely, usually we very rarely had meetings in the summer. Now, did we have some? Sure, but we didn't really have a lot of them in the summertime. Okay, because people were away in quorum, but there wasn't a lot of activity, but it was mostly, it was like July and August, we didn't have a
But
meeting.
by the way, they're usually short meetings.
Yeah, they are.
They're
Yeah,
very short,
yeah,
but like, the best way to say it is. When that big meeting we have where we make
and you're.
32 transfers, we would make those over about 6 meetings.
Yeah, hundreds of thousands of dollars, and you're looking at that and you're like, wait a minute, so by having it more frequently, and again, shorter, you can see the progress of what's happening, okay? And that's why I'm very happy to hear what you guys are working towards.
There's probably a need that arises maybe in, probably December. Somebody isn't gonna make their budget, but it's been challenging for the departments to deal with what they were dealing with before, as well as for us, because if somebody transferred $5,000, they have to internally remember they took it out of supplies and they moved it over to repairs. And
Yeah,
it's gonna be much easier going, it's almost like having a separate set of books, and it wasn't fair. So this is gonna be a great improvement. I mean, go back to where we were, but.
But again, and there are several months, we may not have had a meeting in November, in October, it's not like it was every month. It was when it was needed to help everybody on the same page, because I remember sitting in those meetings saying, okay, now I have to remember, okay, for budget season, do we need to increase the police budget or decrease the police budget based upon the overage or the underage? And sometimes I would bring that thing and keep it in my book so that when we're doing the budget, so I think this is just gonna be so much.
Yeah.
So thank you.
Agree.
Yeah, be better. I'm flabbergasted that was happening.
Yeah.
I mean, I knew when I was voting on all this stuff that it was way too much at one time.
Mhm.
And I knew that half of the I saw 4 or 5 places where the budget didn't add up. And when I pointed it out, I got, circle talk, which is fun.
And we're in a public meeting, so
Yeah.
I'm not gonna get into too
No,
much
no,
detail. I just want you to understand that we recognize that and we are correcting it.
Okay,
And Eileen and her team are doing great,
okay.
and the entire office is being restructured. And we're gonna have a person, Lisa, who is in the department, is gonna be in charge of, what do we call it?
Reporting.
Reporting. So she's gonna issue reports to me when necessary. We'll bring them here for transfers and things like that. And, it'll be I think a more efficient system.
Right, taking a sip from a garden hose instead of a fire hose. Be a lot easier than what we had to in the past, so that's good.
Yeah. So. I'm almost ready to turn the meeting over, Jim. You didn't keep looking.
I'm gonna get like this.
You're lucky I like you, Pete.
Right. I like you, Bob, before you like me.
Nah, I don't think that's right.
So, we just see what we have first, too. All right, so just a couple preliminary comments and then we'll start the formal meeting. We gave everyone a handout. Preliminary facility improvements. I don't know if you had a chance to glance at it, but remember this. We're working in many ways to straighten out, improve, enhance our capital reserve account. For those on the finance board who weren't here at the borough board meeting who don't know what happened. Last week or the week before, I guess now, we received $3.8 million from Amazon for permit fees. So one of the things, I'm gonna bring up when we get to it is to help with our capital reserves, that we transfer the money initially to that account and use it to make sure we get through the year with all of our facility issues. And we're gonna have quite a few at the schools because they've been neglected for way too long. Now, as a way to make that job a lot easier, we have a proposal that is being evaluated at many levels. So capital facility improvements go through our, we call it the 5-year capital plan, but I'm just gonna call it the capital plan now, group, which Bob Metz chairs, which he has for many years. Great borough people on it. Ray Lennon comes to mind, Carl Herb's wife, Cindy Herb, a lot of long-term borough people. It's a good group. It's functioned well for years. And, they will be the ones working on this. Their advisor will be, our energy advisors, advanced energy efficiencies, our new bonding attorney, Matt Ritter from Shipman and Goodwin. And they have been working with the town a lot more closely in the last year on several projects, not all of them, but some of them. And it's gonna require a lot of vetting. We're also, Mike Massacott, Todd Pirelli, who's our facility manager, Jim Stewart, we're all working on it. But essentially what it is I'm gonna call it a trade of a a pretty large solar project at the high school. Sort of like, in return for them giving us approximately $10 million in upgrades to our facilities in areas where we would have to spend quite a bit of capital. Now, there's a million moving parts here. There's a lot of issues. It's urgent from a time standpoint because the president is not too fond of solar projects and things of that nature, and they're changing all the laws. So there's a late September, October date to put in a request for solar. So in the next 6 weeks or so, we want to vet this out. But what we want to do is get improvements to our municipal buildings, our schools, in the lighting area, in every area, really, air conditioning, electrical, furnaces, condensation, cooling towers, virtually everything, dehumidifying the pool. And these are designed to be more energy efficient. And the good part is that, and the part the attorneys are vetting out is that the contract is going to say flat out in simple English that no matter what happens, no matter whether this works or not, we're not gonna have to pay 5 cents more than we're paying right now. So it's supposed to be an ironclad guarantee. Shipman and Goodwin will be vetting that. Our energy people will be looking at it. We're gonna try to reallocate some of the resources. For example, we don't want to spend a lot of money on the town hall because it's not gonna be the town hall forever. So there's things like that we're looking at, but there's some urgency and there'll be quite a few meetings about this over the next 6 weeks. So at this time, it's my honor and privilege to turn the meeting over to our wonderful chairman, James.
Thanks, Mayor. Oh, kind of, yeah.
You can make a motion to adjourn.
Are there any questions?
Yeah, what's left?
I-
Yeah,
What's the
point
discussion?
also.
The only question I have, Mayor, so the last page of this is the totals of everything in the packet?
Yeah, that's a preliminary.
FIM?
Yeah,
Okay. And you're saying that if I heard correctly, this solar project will give us this $9.6 million
for free.
for free?
Yeah.
So we're paying,
Sounds too
What-
good to be true.
yeah, we're paying
Yeah.
what for the solar project?
Zero.
How are we paying?
I know, that's why we
I
have.
don't like this.
Well, that's
I
what-
like it, but I don't
let me
like it.
stop.
Yeah, right.
That's what we've done with all of our projects. We have, every one of the projects we've done in the last 10 years has been no cost to the borough, guaranteed energy savings, and reducing our carbon footprint. So this is really no different, except this is a bigger project. And I told them that, you know, that we want to be compensated in capital. And this is what they're proposing. Now, we're changing a lot of it, but the question you're asking is really a legal question. And we have a contract. They sent us a contract that supposedly says this. And I agree, it sounds too good to be true. But they told me that with a fuel cell, and it wasn't too good to be true. It's true. It's the same principle. The savings, this is essentially them saying that by making these improvements, we're gonna save so much money that we're gonna take your money and come in so far under it that we're gonna make money if you let us do this solar project, which I wouldn't buy. And I think what you're saying is, I wouldn't buy that.
Mm.
But what's different is, if it checks out, we're gonna have a contractual guarantee that no matter what happens, the guarantee will hold up and we won't pay 5 cents more.
Who is they?
Johnson Controls, good question.
In the solar
Yeah,
company
yeah,
is.
so-
No, Johnson Controls is one of the largest companies in the United
They
States.
do automation stuff.
What?
They make automation stuff.
They do
That,
everything.
Yeah.
They do, they're huge.
Mayor, the
Yep.
question that I have is. And I don't need to bring up a bad subject, but the high school was once solar.
Yeah, it was built into the roof improperly.
Well, that's what I'm saying, like, where, like, and we got screwed with that.
Well, let me tell you, so a lot of people don't know what happened. We didn't get screwed. It didn't work. Right? What happened was there was a new technology. All of this preceded me, of course. That was built into the roof. So the solar wasn't like you see it above the roof, it was built into the roof. The technology failed, not just in Naugatuck, but around the country. And it had to be removed. Now, as you recall, I'm sure you do, we made a great move and we didn't have to remove the roof as we were told by 10 people. But we removed the system. But because of state reimbursement laws, we had to wait out 5 years before we could do a new solar project. So now we've waited out to 5 years. So we can do a new solar project now. And the solar project, and by the way, this is also included in this process is Melissa Cooney, the Board of Ed, they're all involved in this. But what we're being told is that we're gonna get a lot of upgrades to our buildings that they're gonna pay for and guarantee us we don't have to pay them back. So I agree, there's a million questions.
Who brokers the solar panels?
We have our energy consultants. In other words, when you say brokers, we,
Usually like a company that installs them and does all that. Johnson Controls doesn't do that. It doesn't do solar.
so what, the way we've done all of our projects, and by the way, we've done 4 or 5 other solar projects. We've done a fuel cell project, we've done LED projects, we've done a lot of projects. So Gary and Adam, I'm sure most people who are here know them. they come to, us. They're the Borough Energy Consultants. So their job is to make sure that Johnson Controls does what they're supposed to do. And I will say that they will monitor them very carefully because they're sort of competitors in a way. So, they are our borough energy advisor. So usually what happens is, they'll get involved. Some of the projects go out to bid or certain portions of it do. Now, exactly what Johnson Controls does or their subs do, I guess is part of the vetting process. I'm not even sure. But all I know is they're huge. They make equipment, they design it, they sell it. So.
I guess I'm just curious where where a solar company comes into play with this.
So we're gonna have our energy consultants answer those questions. And by the way, they will be part of the whole process. Now, let me just think, the finance board doesn't really have that much to do with it. But, the 5-year capital committee, the borough board, and the Board of Ed are the three entities that do the project. I'm bringing it up here not because the finance board has to do anything, but because, we're having a meeting, it's a big thing. I want everyone to know what's going on. And we don't have another borough board meeting until September. So I thought this would be a good night to start a discussion, that's all.
Nice one.
Yeah,
I find it amazing that after we spent all that money to renovate the high school, we still have a humidification problem in the pool that was never addressed. And I'm glad you're getting this stuff for free because frankly, we've paid for it several times. How? Okay, don't answer my question. I'm just
it's
frustrated.
a comment, it's not.
It is, it's a comment. That's right. Thank you. Okay, I'm done.
Yeah, when I was on the committee, when we did it, pool was probably the most problematic portion of the entire high school project.
Mhm.
Because what we did with the natatorium addition, the light change, the modification, we were still stuck with the original structure. We never really took the building down, so the roof never got raised to where it needed to be for the
Right.
divers and other things didn't get done because that would have added a considerable amount to the project.
Right.
So the pool was always problematic. I'm glad to see the humidity issues being dealt with down there because that really impacted a lot of the improvements we put in. The high humidity caused issues
Yeah.
with other things down there, but boy, that was a burn our saddle, the whole project. The pool was not easy, easy part is probably the most difficult part of that project.
Mayor, in their contracts, do they outline how much they make? For them to give us 9.6 million, can we get more?
Well, that's part of the vetting process. There won't be in the contract, but there will be questions that they'll have to answer.
To me, it's considerable.
Yeah.
I mean, if they're willing to do this work for us at no charge and then we get 9.6 million, I wanna double it.
Well, I'll put you on the negotiating team, but I'll just say this, we gotta finish, I'm gonna work on making sure we get what we want.
Yeah.
Making sure the contract legal, the rest of the team. I want to get involved at whatever level they want, but the thing that's disconcerting is we have to get to the end before.
Right.
Um,
Fast.
Before the laws change.
Right, cause this is money I'm assuming this corporation wants to use to give them work. It's probably still from the Build Back Better program,
And by the way, this
which
is.
they're reversing most of it.
Yeah, I should have said this. This has been going on for like 4 years. But we couldn't do it until we waited 5 years.
Right.
But, this is not like something that just happened yesterday. This has been going on for a long time, but there's a lot going on, as I said, there's a lot of moving parts.
Yeah.
So anyone who wants to get real involved, I'm all for it. The 5-year capital committee, is the entity in Naugatuck that recommends to the borough board what to do. And then the Board of Ed has to vote separately. So that's how these projects work in the big picture. But the more eyes, the better. I got plenty to do between now and then.
It's interesting, you put $50,000 for windows here. Was that one window? No, we don't want to replace them all. That would be ridiculous, but
This is where our team is looking into it.
I'll take a motion to adjourn at 8:29.
I'm gonna call for the motion if you allow me to frame it under item six.
Almost had.
Pitch it back to him.
No, it's not pitching it to me. I'm gonna frame a motion that you can call for.
All right, go ahead. Mayor Pete.
Well, let me think for a second.
Oh, God.
Motion to transfer Amazon building permit and connection fees to undesignated capital reserve in the amount of 3.8 million.
Do you wanna leave it all, or?
No, I want,
Because we have, I think, 1.2 in the budget for the building committee, for the building permits.
yeah, so let's transfer the rest. Well, no, but the 1.2 includes other permits.
Yes, it
So
does. So we
six-
normally have about 600,000.
Right. So we want to transfer 3.2 million. The number for the motion was 3.2 million.
I'll second it.
So I didn't make it.
I thought you
James is
did.
gonna ask someone to
I'll
make
entertain a motion for.
And so be it.
it. So you're making a
I'll
motion.
make a motion.
Julie will second.
Oh, I'll second.
Yeah, we can blame her later.
All in favor, say aye.
Uh,
Any opposed? Any abstentions? All right, hearing none, the motion passes.
So we could adjourn?
So, but let me just tell you, so this is good because we think we're gonna find more money in the capital reserve account. But now I know that no matter what happens, we have enough to make it through the year, and if the schools are like way worse than I anticipate, we're gonna be okay. And we got the rest of the year to improve the situation.
Are we expecting more money from Amazon this year?
This year, no.
So this is in this fiscal.
Well, don't forget,
year.
so, I mean,
over.
let's go over that. So. They're entitled to a 5-year enterprise zone, plan.
Yep.
So in their first year of taxes, they will pay 20% of the assessed value of the building. Now, I don't know exactly when it's gonna be done. We have a schedule, but they're going quickly there.
Oh, yeah.
They're gonna start erecting steel in September. There will be a steel erection ceremony. And it's moving quickly, but when the building is built, we'll get 20, 40, 60, 80, 100. Anticipate that the number will be 2.5 to 3 million, our half for the real estate. And that does not include personal property, equipment, robotic equipment, which will be evaluated separately.
I meant permit fees, the
No,
permit.
those are, they paid the total fees all at once.
Okay.
Don't forget.
And they paid another $89,000 yesterday for the
Okay,
building department.
okay, hold on. Oh, excuse me. So to answer your question, that's for the structure.
Yeah.
They still have mechanical fees for plumbing, electrical and things like that. So You should, I want you to report to me when they pay those, cause.
Yeah, they just did, yes.
But do you know what, find out what that was for, 89. Can you,
You feel the blasting of the urine?
Yes. And I sit at my desk,
Oh, my house shook the other day.
yeah, every so often.
it's a good shake though.
Can't fit on you.
It's 24/7, I mean, they're there all the time.
Although I will say
Sundays.
they don't, yes, but but you hear that constant,
Yeah,
and then you hear blast.
Sure.
right behind me.
Go ahead.
All right, motion to adjourn, sorry, at 8:33.
Second.
You got it.
Thank you.
Before that clock, it's already.
See,